just reflate. So you use monetary policy, massive monetary easing, i.e. you start handing away free money on the pavement, which of course the Japanese government has been doing that for as long as we can remember. And sure enough, that is what the Fed is doing. So they don't call Bernanke Helicopter Ben for nothing. He is the author of their great paper where, we've got the printing presses, we can print dollars, we can dump, lots of free money on people, or very, very cheap money, and rescue the system, right? Which is okay, and that is what the markets are reacting to. So, is he doing the right thing? And if I were him, would I do that? Yeah, you've got to do something. And reflation, monetary easing, fiscal rescuing, handing people out money is most probably the right thing to do. There is one major problem with monetary easing when you don't have, and this is the key thing again, when you don't have a corporate cyclical classic recession, but you have a financial crisis, credit crunch, and a housing problem, right? That is a different animal. That is a major sickness. We did this in Indonesia, Thailand, Korea, right? All over Asia, in the bank-led crisis, the same thing. You cannot force the bank to lend all the cheap or free money you give them. You give them all this stuff, right? And you think they're going to then go and re-lend it to people so they get the cycle of credit going again, so they go and spend it, and they go and buy stuff, and consumption goes up again, and you get the wheel that is now frozen of the economy unjammed and moving again. But you can't force them. There is no law in the land that says the Federal Reserve gives you this money, now you go and lend it to a bunch of deadbeat borrowers. And what happens with bankers, because as we all know, bankers aren't the smartest people in the world, is they do lots of stupid, misguided lending on the upcycle, right, to people that maybe they shouldn't lend. That's the irrational, exuberant side. On the down cycle, when the thing blows up, they put their head in their sand and they freeze. And many of you in the room will know this. You'll be personally experiencing now your own version of a credit crunch, where the kind of credit terms, the kind of lines you could have got as short as 12 months ago, you're not going to get anymore from any bank, right? That's called, that is credit crunch. That is credit tightening. You multiply that by millions of people around the world and millions of businesses around the world, and that is the best way to suffocate economic growth. So when you have a financial crisis, bankers put their head in their sand, they go into a fund, they're terrified of doing anything, they lock up for at least 2 years. That's all right. We have two other engines of the global economy, Europe and of course Japan. This is the picture for Europe, right? Not the best looking bunch. His wife's not bad. I prefer the picture of her without her clothes than the picture. Of course, all that fuss in the British papers is unfair because they had her standing next to Camilla Parker Bowles. So But other than that, right? You can see that the numbers, again, the standard stuff I like to look at: GDP, interest rates, foreign exchange reserve. But look at the CPI number down there. Look at the relatively anemic growth rates. The problem is you're talking of a Eurozone that can't really pick up the slack because it hasn't even crawled above 2%. Other than, even the dynamism of the UK economy is now going down because it's following the same pattern of a housing bubble and overextension of credit that the US has. So you're not going to get a lot of help. And when you look at the latest numbers on consumer expenditure, consumer confidence, lowest in 2 years, first time in 6 years consumer expenditure has dropped. Right? Retail sales, right? I mean, none of these figures look good. You're not going to get the white, the knight on the white charger from Europe. And as for these guys, right? Interesting that there was a pickup in consumer expenditure in Japan, right? For the first quarter of the year, which we couldn't understand. Nobody could understand. Like, hang on a minute, this is an economy that's been in front for a long time. We don't believe the Japanese consumer is getting more positive. We think that they're going to go down, just like Europe and the US. So we investigated the data, right, these guys here, and it was, the pickup was a purely seasonal thing driven by weddings and funerals, right? So take your pick, right? Brides and grooms are all there. There is a limit to how sustainable consumer expenditure can be if you're relying on people dying, right? Unless you go and shoot a lot of them, of course, or people getting married, right? That is not a sustainable pattern of consumer expenditure. And sure enough, what we're starting to see now is it's already flattened since then, and we think that the next quarter for Japan, so my was go and look at Q2 for consumer expenditure, wedding time is over, the normal death rate has reasserted itself, including the ones that jump off high bridges and so on, as they tend to do in Japan. And you know, you get back to a very poor picture. Consumer confidence, as you can see, has taken a massive tumble, lowest since the last time they had a downturn. And you're not seeing any other figures there that look particularly good. And again, exceedingly anemic growth rates that we think are going to be sub 2%, which is really the level at which you need to get some positive news. Okay? Now, of course, you can do the old Japanese trick, which the Americans learned to do themselves, is what Mark will hopefully be saying to you. Obviously, price increases to Jim Rogers School, or is this another bubble and it's going to burst, right? And even food, we're starting to see this, right? Corn, right? Rice, which is a major problem for Asia. Soybeans, you know, wheat. Okay. This we think is unprecedented because usually, if you just have super cycle speculative-driven bubbles, right? What you see is the hard stuff. But you don't see much influence on the soft stuff, and it certainly doesn't feed into food. People tend not to speculate in food. They speculate on the London Metal Exchange. They speculate on commodities where there's a well-established market and mark-to-market price, like metals. They don't do it with rice, where there is no mark-to-market pricing and no real established clear market, or tea. Suddenly the price of Sri Lankan tea is going, you know, through the roof, and it hasn't done that for a long time. Or coffee, or so it doesn't make sense, right? What we believe this is part of is people have underestimated the long-term secular shift on the global economy and the revolution that's affecting all of us of the entry of 2.5 billion people that were not part of global capitalism for a long, long time. They were doing their own thing in India and in China, you know, doing their socialist, centrally planned economy things in closed systems, and they weren't part of global free trading and free markets and the WTO. And they, from a point of view of economic terms, joined in a massive rush, because joining over a period of a decade, right, from the point of view of global economics is the equivalent of a shock. It's a demand shock to the system. Guess what? All these guys, right, they watch all the TV programs that you watch, and they say, hey, we want what you've got. We want a car and drive. We want to eat a steak, and you know, we want to have the same kind of lifestyle, and there's no reason why they shouldn't. And that aspiration and drive and underlying economic growth in their economies is driving up a level of demand pattern that has never been seen in the world before. So when people say it's got to be a bubble because it's spiking at levels that haven't been seen before, they're forgetting there's a demand pattern that you haven't been seen before. There's a well-known data of how much wheat or how much corn it takes to produce a kilogram of beef. But the interesting stuff is go and look at the consumption pattern by the Chinese in China of how much beef they consume. Right? It's tripled in the last 10 years, right? And they're still consuming, you know, about a quarter of what we do, okay? You know, and all these American steakhouses haven't even landed there, okay? So imagine what it's going to be like when they start eating the way we do. The other thing you should go and look at China is they've worked out some time ago a fundamental part of your manufacturing base for any developed country has got to be automobiles, right? So let's have an automobile business and sell off, but first we need the infrastructure. So they're very smart. They built a highway system. You go to China now, they have built out a highway system that's a hell of a lot better than the British one. I mean, but of course that's not saying much, right? But you compare the M1 to what they built in China, it's extraordinary, right? And then they